Hello, everyone, and welcome to episode 2 of my journey to becoming a funded and full-time trader in 2024. So pretty much, I completely forgot that today the futures market is closed. I said that I was going to actually show a trade today, but that is not going to be happening because it is closed. So instead, I thought I'd go over my strategy a little bit more since I didn't go too much in depth into it in the last video. So first of all, you'll notice that the video title is my strategy to losing less money day trading. So obviously the best way to do that is simply by not day trading, but we don't quit. So we're just going to try to lose less. But pretty much starting off, before I even decide that I'm going to trade that day or when I'm going to trade, is I look at upcoming news on forexfactory.com. Pretty much what this goes to show is future news that's going to be coming out. And the more important it is and the more impact it is believed to have on the market, it will be green for it doesn't matter too much. Orange, it matters quite a bit. And then red, it's this is going to impact the market quite a bit. So obviously, guess who's not going to be trading at 10 a.m. because when the news affects the market, it just brings a level of unpredictability. And the truth is, when you're day trading, it's okay to be scared. I mean, if you're scared and you never put a trade, you'll never lose money. So there you go. You're doing better than 90% of traders. Obviously, if you're trading, you want to trade where these are green, or sometimes they're gray, which I believe means that they'll have literally, or maybe there's no news at all. I don't know. But let me just show you. I'm going to hop on forex.com, and pretty much this is how the site looks. You just you don't have to log in or anything. You just hop in, and then you see the different, I guess, I don't know, this looks like a Lego piece, but I think it's a stock market chart. And gray, there's nothing. There's a holiday, no news. Then this color, there's some news. Red, stay away. Don't go near. So that is pretty much my first step before I even really open my computer and open Trade-of-A. Trade-of-A is the platform I use to place my futures trades, by the way. I'll leave a link down to it in the description. But pretty much, as soon as I open my chart, I want to figure out what is the market trend. So pretty much, first step is to find out which direction the market wants to move. Obviously, it's very easy to say now that this happened in the past, so it's very easy to see now, oh, this went up here, this went down here, or there was a big dip over here, and then a big upward trend over here. But pretty much when you are actually live trading, you want to place your support and resistance levels at the points that bounced off. So obviously I would put my support and resistance levels right there, because as you can see here, it bounced off 1, 2, 3, 4 times. And then something interesting is then finally it broke through. And because it broke through, it had a giant downward trend because it broke through. Now, of course, support and resistance lines are not 100%. I'll be honest, this kind of gives you maybe a 60%, 40% edge to this strategy. But pretty much the way that the strategy is going to work is if you see that the downward trend that is most likely going to be a downward trend, it is slightly safer to place a short position. And obviously, if you see that it's going to be an upward trend, it is safer to place a long position. But how does this actually work with my trades? So pretty much when I place a trade, I usually place it on the 30-second chart. I forgot to add this. When I make my support and resistance levels, I like it to be 15 minutes. And then when I actually place trades, I go into a 30-second chart. So pretty much this chart right here is what I am looking at. I'm in my trades for literally a few seconds, probably like maximum like 20, 30 seconds. And then I just like take my quick profits. But now this is the part that kind of, I say it comes with experience, because this is honestly like kind of a gut feeling, but it's not. I know that sounds like gambling, but it's not a gamble, because you have to use technical analysis and your experience together to become a successful and profitable trader. Technical analysis without experience, like all those gurus online try to preach, oh, buy my course and you'll be able to make $100,000 with your $1 account. Obviously, that's not realistic. Some of the way that you make money is just purely by chance. Sometimes you'll make a bad trade and come out in profit. Sometimes you'll make a good trade and come out with a loss. So pretty much this part comes with experience, but the way that the strategy works is, right, this is a horrible example because there's like zero volume, so no one's really trading. But let's say this is a downward trend, all right? That means that there is we go to a support line, let's say it breaks through our support, and now we are fairly confident it is a downward trend. What this means is that we'll have a slightly higher chance of gaining profits by shorting the trade. Let's say this was a downward. I know this is a horrible example. I will get profits from it going slightly down, and I will lose profits from it going slightly up. And this actually goes very well with the next point, which is where I'm putting my stop and my take profit. Because I am a beginner trader, just to be super transparent. I'm a beginner. I'm not a profitable trader. This is just my strategy that you guys can follow along. And I hope that we can become profitable and full-time traders by the end of 2024 together. That is my goal. So I want to have a community of beginner traders, pretty much. But for beginner, just keep it a 1-to-1 ratio where your stop is 2 ticks. I know this isn't exactly 2 ticks, and your take profit is 2 ticks. So this is like an example of me shorting. So I'm shorting the trade. So pretty much my take profit is going to be when the market comes down, and my stop loss is going to be when the profit goes up, when the market goes up. From my experience, for some reason, it hits the stop line way more than it hits the take profit line. But I know that'll improve over time. Obviously, as you improve, you can start doing like 2-to-1 ratio or even 3-to-1 ratio. Let's say that I'm trading minis. So S&P 500 minis, where each tick is $12.50, I believe, right? Yeah. So pretty much my take profit is going to be 2 ticks, which is $25 if it goes in my favor, $25 lost if it goes against my prediction. But obviously, if you get better, you could potentially have it to where you make $50 if you're correct and only lose $12.50 if you're wrong. But I'm just not there yet. I hope to be there eventually. Also, I want to add, because it's too much of a time hassle to add these take profits and stop losses while you're in a trade. So the best way to do it is make it automatically put the take profit and stop loss once you place an order. And the way you do this is, I'm on Tradevate. It might be different for others, but you go to ATM, and I have mine as default, but pretty much yours is going to look a little different. As soon as you place this, it will tell you the amount of ticks you want your stop loss and take profit. It's super simple, super straightforward. But just to let you know that on your Tradevate account, you click down here at ATM, and then you title it. I titled my default. I don't know, that's like a really boring title, but that is just what I titled it. But yeah, this is pretty much going to be my strategy. I'm going to stay very consistent with it. Hopefully I can start trading tomorrow and show you guys actual trades. This is a demo account, so my plan is for the next 2 weeks to only trade on a demo account. In 2 weeks, the only reason I'm doing it for only 2 weeks is because you have to pay a monthly fee after, which I just don't find the ROI of paying $12 a month for a demo account is that good. But yeah, so this is pretty much going to be my plan. And I'm excited to see where it takes us.